Welcome to Talk Tickers.
Great to be here.
Today, we're diving deep into the TeraWulf Q1 2025 earnings call.
Yep.
Our mission, as always, is to pull out those key insights, help you understand what's really going on behind the numbers.
And this quarter definitely had some interesting dynamics, challenges, but also some, significant strategic moves.
Definitely. So let's get right to it, starting with the overall picture.
Absolutely. Look, it was a challenging quarter for their Bitcoin mining operations. No way around that.
Why was that?
Mostly down to these temporary but pretty significant spikes in power prices. Plus, you had the Bitcoin network difficulty increasing, which always adds pressure.
Right, and that flowed through to the financials.
It did, yeah. You saw EBITDA dip slightly negative for the quarter.
Okay, let's break down those numbers a bit. GAAP revenues were flat, $34.4 million, same as Q4.
Pretty much flat, yeah. But the key thing was the cost side.
Ah, okay. What happened there?
Well, GAAP cost of revenue, and this is excluding depreciation, it jumped up 25%.
Wow, 25%.
Yeah, landed at $24.5 million. And the main culprit, power costs.
How much did they go up?
Their realized power prices were up 37%. So you can see how that really squeezed the mining margins.
Okay, so higher costs, flat revenue. That usually means
a bigger loss, exactly. The GAAP net loss came in at $61.4 million. Compared to about $29.2 million lost the previous quarter, so quite a jump.
And non-GAAP, adjusted EBITDA.
Similar story there. It swung from a positive $2.5 million in Q4 to negative $4.7 million in Q1.
So yeah, a tough 3 months financially. But what about the outlook? Are things looking up?
They seem to think so, yes. The big factor is power pricing. They expect it to normalize, come back down to around 5 cents per kilowatt hour for the rest of 2025.
And that would make a huge difference to mining costs.
A huge difference. The other piece, though, and this is important context for those Q1 numbers, is the investment in HPC.
Right. The high-performance compute hosting, they're spending money there now.
Exactly. They incurred significant incremental costs setting that up in Q1, but without any real revenue coming in from it yet.
Okay, so costs are up partly because of that investment, too.
Precisely. But that's expected to change pretty soon as these dedicated HPC buildings start coming online.
When are they due?
They've got a schedule, Q2, Q3, and Q4 of this year. That's really the pivot point they're aiming for.
Got it. Okay, let's dig into the Bitcoin mining side first then. Production was down.
Yeah, they self-mined 372 Bitcoin at their Lake Mariner site. That's down about 12% from Q4.
Due to the difficulty and maybe throttling back during high power prices?
Likely a combination of both, yeah. Network difficulty makes it harder, and high power costs made it less economical to run full tilt sometimes.
But interestingly, the value per Bitcoin they mined actually went up.
It did. Average value is around $92,600 per coin.
Up from about $82,700.
Right. But that gain was more than offset by the cost side. Let's
talk about that power cost per coin.
Yeah, it was high. $66,084 per Bitcoin mined in Q1.
Wow. Compared
to $46,328 in Q4. So a massive increase.
And they put that power price spike in context, didn't they? Something about standard deviations.
They did. They called it a 1.76 standard deviation event for energy prices in their specific zone in New York, NYISO Zona West.
Which basically means?
It basically means it was a very unusual, statistically significant spike, not the norm. Okay.
But despite that volatility, their mining infrastructure itself, the hash rate and efficiency
seems solid. They exited Q1 with 12.2 exahash of self-mining capacity.
Efficiency.
Fleet efficiency holding at a pretty strong 18 joules per terahash, so the underlying tech is efficient.
Good. And they also completed another building.
Yep. Miner Building 5 was energized. That brings their total operational capacity up to 245 megawatts now.
And they got those new miners in, the S21 Pros.
Yes. Crucially, they received and installed all of them before any potential new tariffs could have hit. That's a significant win on the procurement side.
So the good news is, with power prices coming back down in April,
their mining operations returned to positive EBITDA in April. So that normalization is already having an effect.
And their cost guidance reflects that.
It does. That Q1 cost of production, around $72,000 per coin, they expect that to drop significantly.
To what?
Guidance for Q2 through Q4 is around $47,500 per coin. Again, heavily dependent on those lower power prices holding.
Right. And it sounds like they're not planning another huge mining expansion right now.
No, the focus seems to be shifting. They're aiming to optimize the current fleet, hit that previous target of around 13.1 exahash, but the main growth story they're pushing now is HPC.
High performance compute hosting. Okay, let's pivot there. What's the mission?
The mission is basically scaling up purpose-built, liquid-cooled data center infrastructure. Think AI, think other really compute-heavy workloads.
And the demand is there.
They say demand remains very strong. Their immediate focus is delivering for their anchor tenant, Core 42.
Right, those 3 buildings.
Exactly. The WULF Den, CB1, and CB2.
What's the status?
The WULF Den is actually operational now. It's expected to start generating revenue this quarter, Q2.
Okay, so that's imminent.
Very imminent. Then CB1 is slated for Q3 and CB2 for Q4.
And it sounds like a close partnership with Core 42.
Very close. They mentioned Dell, who's Core 42's integrator, expects like 180 people on site just for GPU tuning. That gives you a sense of the scale.
Wow. And they're designing these buildings with the future in mind.
Yeah, they're constantly tweaking the designs, optimizing for future, even more power-hungry GPUs.
Which might affect timing or cost slightly.
It could, yeah. They acknowledge that these refinements might have some impact. But the goal is future-proofing.
And getting this Core 42 deployment right is key for their reputation in HPC.
Absolutely critical. A successful launch really positions them as a leader in this next-gen data center space and should, help accelerate signing up more tenants.
Are they talking to others already?
They are, yes. Actively engaged in discussions with other potential HPC customers.
And on the power side, they need a lot of it for this.
A lot. They just got approval from NYISO for another 250 megawatts at Lake Mariner.
Bringing the total approved capacity to
500 megawatts now, and they're not stopping there. They plan to request another 250, aiming for 750 megawatts eventually at that site.
That's massive. They're watching tariffs on the build-out costs, too.
They are, estimating maybe a 5–10% impact, but still committed to underwriting these projects to deliver mid-teens unlevered returns.
And the financing for the Core 42 part.
That seems to be moving along. They're officially launching the project financing process next week, actually. JP Morgan and Morgan Stanley are advising.
Big names.
Right. And they said early feedback from potential lenders has been positive, so that's on track for mid-year.
Are they looking beyond Lake Mariner, too?
They are, evaluating other expansion opportunities. The Kaga site, which is like a sister facility, is apparently top of the list. They're looking for sites with quick time to power and maybe on-site generation potential.
Makes sense. There was also talk about simplifying the company structure, integrating Beowulf.
Yes, Beowulf Electricity and Data. It's a related party. They're pursuing a full integration.
Why?
To simplify everything, get rid of the related party disclosures, streamline operations, and just align incentives better. Seems like a sensible housekeeping move. It's being handled by independent directors.
Okay, so near-term priorities seem clear.
Very clear. Optimize mining, deliver those 3 Core 42 buildings on time and budget, lease up more HPC capacity, and close that project financing.
Got it. Now, you mentioned design refinements impacting cost. The CapEx for Core 42 went up.
It did, yeah, by about $65 million, from roughly $365 million to $430 million for the initial 72.5 megawatts.
But the rent is going up, too.
Commensurately, yes. Initial rent per megawatt increased, too, from about $1.5 million to $1.6 million.
So the net effect on yield
actually results in a slightly lower net yield on cost, but it means about 14% more revenue in year 1.
And the cost per megawatt overall, still competitive?
They say yes. Comes out to about $7.2 million per critical megawatt, which they state is within their guided range and below many peers.
Okay. And that financing they're launching next week, how much are they targeting?
Around $300 million in debt for that data center build.
And separately, they announced a buyback.
A new one, yeah. $200 million share repurchase program authorized by the board. That's on top of about $50 million remaining on the old one.
And an ATM.
Also planning to file an updated $200 million at the market prospectus supplement. So lots of potential capital allocation tools at their disposal.
They seem pretty confident about the value in the HPC deals.
Very. They put out some internal analysis suggesting just the initial 60 megawatts leased to Core 42 is worth around $2 per share, fully diluted.
And future deals.
They estimate every extra 50 megawatts they contract at similar economics could add another $1.30 per share. So you see the potential leverage there.
And the margins on HPC.
Expected to be strong, around 75% EBITDA margin on that initial 72.5 megawatts.
Higher later.
Potentially higher incremental margins on future capacity, yeah, because they can leverage the large site infrastructure. And maintenance capex is expected to be low, around 3%.
They seem to have a model now for these HPC buildings.
Looks like it. A perfected design for a 50 megawatt gross building, which translates to about 42 megawatts net usable capacity. The idea is they can replicate this design.
And the time frame from signing a lease to having a building ready?
They estimate about 12 months, which is pretty quick.
So for their 2026 target, which is about 170 megawatts of gross HPC capacity.
Right, that's roughly 3 of these new standard buildings. They'd need to get those contracts announced by the end of this year, 2025, to have them online by the end of fiscal 26.
Okay, busy year ahead on the contracting front then. What about that Beowulf integration timeline?
They said it's expected to be near term. The independent directors are managing it. They see it as really enabling for shareholder value long term.
Makes sense. And the capital allocation tools, the buyback, the ATM, how are they thinking about using those?
Seems like they see them as options to have available, especially given the stock's volatility and just the dynamic nature of the business. Flexibility.
But project financing is a priority.
Definitely. To recycle that capital into more growth, they expect lenders will primarily underrate Core 42's creditworthiness for that initial deal.
What kind of pricing are they hoping for on that debt?
Targeting somewhere in the range of SOFR plus 400 to 500 basis points.
Okay. And zooming out, the overall demand environment for this kind of HPC power in space?
Still very strong is the message. Near-term demand for just raw power is high.
From who?
Hyperscalers are getting more selective about where they build, focusing on really high-quality sites with solid energy infrastructure, which could play to TeraWulf's strengths.
And others.
Also seeing strong interest from enterprise customers and what they call neocloud players. They even mentioned customers wanting just half a data hall, suggesting that enterprise demand is broadening.
Interesting. And longer term?
The midterm view is that there might not be a ton of new power generation coming online easily. So sites like theirs with significant existing and planned capacity could become even more valuable.
Right, supply and demand. Okay, let's shift gears. This is not financial advice, but based on everything we've heard, any outrageous but plausible trade ideas?
Well, here's one to consider. Given the expectation that power prices normalize, improving their mining profitability, and considering they just upgraded their fleet,
Right.
You could think about a pair trade. Go long TeraWulf, WULF, and perhaps short a basket of some less efficient Bitcoin miners.
The thesis being?
The thesis is that TeraWulf's lower cost of production post Q1 should help them outperform if Bitcoin prices recover or even just stabilize. You're betting the market is maybe overly focused on the Q1 mining headwinds for WULF.
Interesting. Okay, another idea.
Another angle focuses more on the HPC transition. The Wolf Den is coming online now. CB1 and CB2 are supposed to follow quickly. Demand seems strong.
So maybe just long gold WULF based on that.
You could go long TeraWulf, anticipating that HPC ramp up, but recognizing this is still a bit of a show me story they need to execute, maybe you hedge that bet slightly. Right. You could potentially buy some put options on WULF, maybe expiring out in, say, Q1 2026.
To protect against.
To hedge against potential delays in that HPC revenue really taking off, or maybe unforeseen issues in the build-out. It acknowledges the execution risk while still positioning for the potential upside if they deliver on the HPC promises and win more contracts.
So capturing the upside potential, but with some defined downside protection if the HPC story takes longer to play out.
Exactly. Again, just ideas to think about, not recommendations.
Absolutely. So wrapping up, TeraWulf seems clearly positioned now at this intersection of energy infrastructure and high demand compute.
Yeah, the key is that scalable infrastructure and what looks like a strong pipeline, especially on the HPC side.
The next few quarters are definitely critical, aren't they? Watching that HPC deployment.
That's the main inflection point everyone will be watching, seeing those buildings come online and start generating meaningful revenue.
Well, thanks for tuning in to Talk Tickers for this deep dive on the TeraWulf call.
Hope it was useful.
Remember, always do your own research. Consult with a financial professional. This isn't investment advice.
We just aim to give you the key takeaways and context.
We'd love to hear your thoughts on TeraWulf's strategy. Are you bullish on the HPC pivot? Find us online and join the conversation.